founder of CyberTrain University. You're on Closing Bell, and you know Closing Bell, we do this once a week, and we always introduce new channel partners, people that we always recommend that will help you in your trading to be successful, and things you need and things you don't need. You know, but these are the things you do need, and that's why we brought Zacks Investments. This is the first time we brought them on our Closing Bell, and we're looking forward to working with them in the future. And, you know, I know Zacks all the way back since I started. I mean, I've been doing trading since 1995, and, you know, Zacks has been around all the way back since then. And, you know, we've done some things in the past with them, but now we're looking to, you know, people always looking for research and a little bit more about certain products. You know, that's what Zacks Research does. And we're fortunate to have Jared Slater here. He's one of their equities investment strategies at Zacks Investments Research. He's been there for over 9 years of experience helping investors achieve this superior investment return at the Zacks ranking model. So it's a great tool. I think you're going to have a lot to learn from Zacks. I know everyone here is always looking for, you know, certain reports and so on. So this is one of the first times we introduced this type of a channel partner here on Closing Bell. So don't want to take too much time from Jared. It's going to go on for about a good hour, maybe, you know, a little more, a little less. And, you know, like I said, any questions, please hold them to the end of the presentation. Jared will be closing out the meeting. And like I said, enjoy the presentation. Jared, the stage is all yours.
Hello, everyone. Thank you for joining us today for the CyberTrain University Closing Bell. My name is Jared Slater, and I am an equity investment strategist with Zacks Investment Research. I'm very excited today to share with you the Zacks method for trading and to show you how to harness the power of the Zacks rank. I'm very confident that for many of you in the audience today, the next half hour will have profound implications for the rest of your investment career. And also be sure to stick around because we do have a special offer you're not going to want to miss that is exclusive to this event. So we do have a lot of information to cover in a short amount of time, so let's go ahead and jump right in. I'm going to go and move my screen over for you and make sure everybody can see this. Can everybody hear me okay? Can I just see a yes or no on the audio? So you guys can't hear me? Can you see my screen okay? Excellent. Okay, let's go ahead and get started. So again, this is the Zacks method for trading. I teach you how to harness the power of the Zacks rank. But first, just a real quick message from our compliance department. Today's presentation is for educational purposes only, and in no way does it constitute an investment recommendation in any way. But let's begin with a broader overview of my organization. Zacks Investment Research was founded by Len Zacks in 1978. We are based in Chicago, Illinois, and have approximately 250 employees. Prior to starting his investment research firm, Len was working as an analyst at Rand Corp and then received his PhD in operational research from MIT. Zacks was founded on the basis of Len's groundbreaking research, which led him to discover revisions to earning estimates are the most powerful force impacting stock prices. Because regardless of which school of investing you subscribe to, sooner or later a stock's price correction can be attributed to how much money it's actually making for its shareholders. And while Zacks has had many firsts, we are most widely recognized for pioneering the concept of earnings per share surprise and earning estimate revisions. All this work led to the development of the Zacks performance ranking model, one of the most powerful leading indicators of stock price direction on a short-term basis. Chances are this is how most of you who are familiar with Zacks know of us. And today, Zacks Investment Research is a world-class equity research organization. We are also one of the largest independent equity research firms in the country. We are very proud of our independence. We have no investment banking ties or brokerage ties. I would very much categorize us as an academic organization whose primary focus is getting it right for our members. Our motto is our research, your success. And what separates Zacks from other research firms is we collect information from over 150 different brokerage firms and keep track of over 3,000 analysts employed at those firms. Anytime an analyst makes a change to a stock he or she is covering, that information is automatically sent directly to Zacks. We update and recalculate all this data on a daily basis. This is all in addition to having our own small army of analysts who publish their own independent equity research reports. So the Zacks performance ranking model is what we are most famous for. It is a proprietary model. We have developed that ranks stocks based upon their earnings and earning estimate revisions. The model has a score of 1 through 5, 1 being a strong buy, 2 is a buy, 3 is a hold, 4 is a sell, and a 5 is a strong sell. What's unique about the Zacks performance ranking model versus most brokerage firms is we have just as many buys as we do have sells. Think of it as a bell-shaped curve with the vast majority of the stocks we cover falling into the hold category. Because we limit our number one strong buys to only 5% of our universe, we truly are identifying those companies who are fundamentally improving and have the results in the bottom line to show for it. So there's 4 different themes or factors that we use to calculate the Zacks rank. Agreement, this is the extent to which all brokerage analysts are revising their earning estimates in the same direction. Here we're looking for consensus from the analyst community that earnings are going up or down. Magnitude is where we are looking at the size of the estimate revision. So, for example, we're going to place a greater weighting to a company that has a 10% revision versus a 2% revision. Upside is the difference between the most accurate estimate and the consensus estimate. So Zacks also keeps track of who the most accurate analyst is and places a slightly greater weighting to their estimate. We also look at a company's history of earnings surprises. Our research has shown companies who have surprised in the recent past are more likely to repeat that behavior going forward. So we also take that in consideration when calculating the Zacks rank. We update all this daily and recalculate the Zacks rank every evening. Our model has proven to be one of the most powerful leading indicators of the stock's price direction. To give you an example of just how powerful leading indicator the Zacks rank is, you can take a look at this example. Since 1988, the Zacks rank number 1s have produced an annualized rate of return of over 28% versus the S&P 500 of only 9.8. Had you invested $10,000 into our universe of number 1s in 1988 and periodically rebalanced your portfolio, you would have produced a gain just shy of $4 million versus the S&P 500 of only $112,000. So if you see this little yellow line, it's kind of hard to see, but that'd be the benchmark for the S&P. So I know after looking at this and just a little bit of learning on the Zacks rank, many of you in the audience are wondering, how can you harness the power of the Zacks rank into your portfolio? And this is really the meat and potatoes of what we'll be discussing today. We call
Hey, Jarrett?
Yeah.
People are having a problem seeing your desktop. Can you click on the quick start and click where it says share desktop so they can see it? Up on top where it says welcome event, so it says quick start.
Event, oh, sure. Okay.
And now share your desktop right there. Click that arrow.
Been able to see the early part of the presentation?
Yeah, they didn't see any of it. You have to share your desktop. There you go.
Okay.
Sorry about that, everyone.
No problem. Yeah, sorry for you guys not being able to see that. So I'll just pick up where I left off to give you an idea of just how powerful the Zacks rank. You know, we went and looked at that example. And next, I'm going to be teaching you about the Zacks method for trading. The Zacks method for trading is the process of taking a universe of stocks that have a Zacks rank number 1 and adding additional fundamental criteria to narrow down the list to a manageable number of companies that you will qualify periodically. What this means is, in essence, you are narrowing down the list of stocks of strong buy number 1s to only a handful of stocks that are arguably some of the best stocks your money can buy. So bear with me as So first, we're going to build an effective, profitable trading system by utilizing our leading indicator, the Zacks rank, and then adding additional fundamental criteria. Next, we're going to, once you develop an effective trading system, the next step is to test it by backtesting your screen or system over longer periods of time in different market conditions. You gain a clear insight into the likely performance of your strategy and the risks you may incur prior to investing. Very simply put, if a pattern of behavior from a group of stocks can be demonstrated over multiple periods of time, there is a high probability that same behavior going forward. So we want to see how the strategy held up during different market environments. Optimum holding periods will determine what is the most profitable time frame to requalify your strategy. Different types of strategies have different optimum holding periods. Some do best with a 1 week, 2 week, 4 week, 12 week, and even a 52 week holding period. This is also important in determining which strategy is best suited for you. Some investors prefer a monthly rebalance versus a weekly rebalance. Robustness analysis, this will test your strategy over multiple start dates to ensure your strategies are robust enough to make money in all markets, regardless of when you implement it into your portfolio. So the end result is a quantifiable edge in the market that produces investment strategies with a high profitability, high probability, and a certain level of predictability. The screening criteria used to find those stocks is what gives successful investors an edge to outperform the market. We're able to accomplish this by utilizing advanced screening and backtesting software called the Zacks Research Wizard. The Zacks Research Wizard is an advanced screening and backtesting software loaded with a bunch of equity research tools. With the program, you can create and test stock picking strategies to see if they beat the market or if they're a good fit for your investment style. Zacks has spent years developing market-beating strategies that come preloaded in the software. We have something for everyone, regardless of your investment objectives. We have easy-to-trade strategies for your aggressive growth investor, momentum investors, value investors, and investors seeking income as their primary objective. The Research Wizard is also a portal to access Zacks' database, which has over 13 years of historical data on over 8,000 companies, arguably one of the best U.S. equity databases in existence. We have over 650 different fundamental criteria that are updated daily to use in developing effective trading systems that give you an edge in the market. There's also a place to create your own customized items or data points. And integrated company analysis is a powerful tool for examining stocks using customized charts, graphs, and reports. Here you can very quickly and easily drill down into the details of just about any publicly available information for a company. And of course, the Research Wizard has some cutting-edge portfolio management tools built into it that make keeping track of your portfolio's volume metrics much easier. As I mentioned before, the Research Wizard comes loaded with dozens of time-tested, proven strategies. Many of these strategies we have spent years developing and optimizing to give our members an edge. Our track record has been nothing short of spectacular. I'm going to show you a few examples of some of our more popular investment strategies. Here you're looking at a performance chart of a value and growth strategy called Return on Equity 2. This strategy is one of my personal favorites. Here we're looking for stocks that have a Zacks rank of the number 1 a high return on equity, which, by the way, is a great way to measure how good of a job management is doing running a company. Also, you want to see these companies have a low price to sales ratio, and a high percentage of brokers are saying the company is a strong buy. This strategy produces 5 stocks and is rebalanced weekly. Had you started trading this strategy with just $10,000 at the beginning of 2012, you'd be up over 31 grand, producing an impressive 209% return with a 70% win ratio. Next is a chart of an aggressive growth strategy called Filtered Zacks Rank 2. Now, Filtered Zacks Rank 2 only looks for stocks that have a Zacks rank of number 1, that have also had their earnings revised upwards for this coming quarter. This is all in addition to having the best average broker rating upgrade. This strategy also produces 5 stocks and is rebalanced weekly. Had you started trading this one with just $10,000 at the beginning of 2012, you'd be up over 39,000, producing 290% return with a 69% win ratio. And I know a lot of you in the audience are wondering how we can outperform the index by such a wide margin. Remember that what we're doing here, we're narrowing down a list of stocks with explosive earnings growth, just 5, and then requalifying that list each week. No index of 500 stocks really stands a chance. Here's a value strategy called Value Method 1 that looks for those companies that have a Zacks rank of a number 1 or a number 2. In addition to having low price to earnings and price to sales ratios, the companies need to have high growth rates. It then uses a special blend of upgrades and estimate revisions to select the best 7 stocks. Value Method 1 does best rebalance weekly, but also produces impressive results rebalanced monthly as well. Had you started trading this strategy with $10,000 at the beginning of 2012, you'd be up over 29,000, producing an impressive 214% return with even more impressive 75% win ratio. Next, you have a price momentum strategy called Big Money. The Big Money strategy is looking for stocks that have been strong price performers over the past 24, 12, and 4-week periods. In addition to having a buy or strong buy broker rating, we also want to add a low price to sales ratio to make sure these companies are still a relatively good value. This strategy produces 3 stocks and does best rebalance weekly. Had you started trading Big Money with $10,000 at the beginning of 2012, you'd be up over 31,000, producing a 211% return with a 63% win ratio. Now, next, what I'm going to do is actually switch over to a different screen or give you a look at the Research Wizard software. Just please let me know that you can see the program up here. Great. And what I'm going to do today is give you a short tutorial on how we build an effective trading system and build confidence that it will be possible. Here you can get a feel for what the main page of the Research Wizard looks like. Let's take a second and talk about what we have here. First thing that you're going to see are these 2 large white windows, categories and items. Between these 2 windows, you'll find over 650 different fundamental criteria to use in creating your strategies. Below that, you have your screening criteria table and your report definition table, which we'll talk about more in just a minute. All the way over on the left, you have your quick run or easy access buttons. Snapshot, this will give you a 1-page executive summary research report. Charts ICA, here you could do in-depth, detailed research on your stocks. Just about any publicly available information you can find right here. You want to remember to come back to this button. It's really not uncommon for people to spend an entire afternoon going through their portfolio once they learn how to use it. Your screens button, this is where you get access Zacks' pre-built strategies or any that you create and save in the program. Your backtest button, we're going to use this in just a minute when I show you how to backtest a strategy. And the run query button. This is what you'll use to scrub your screening criteria against our database to see which stocks currently passed. So these are the main features of the program that are most important right now. All the way across the top, you have your file, screen, portfolio, etc. And these smaller square buttons. those are really for more enhanced functionality of the program. But now that we're all comfortable with the layout of the Research Wizard, let's walk through an example together of how the program works. What I'm going to do today is show you one of my personal favorite trading strategies. It's called Growth and Income Winners. And I'm going to teach you how to run a screen, how to implement the strategy in your portfolio, and then we'll test the strategy to see if A, it produces results to your liking, and B, if it's a good overall fit for your portfolio. So what we're going to do to access the screen is go ahead and click on the screen button over on the left, and you'll see we have the different strategies organized in different folders. The strategy we're looking for today is called Growth and Income Winners, and it's located in the Growth and Income Strategies folder. I'll go ahead and select the strategy that we're looking for, double click on this. So the next thing you're going to see is a listing of 7 stocks that pass the screening criteria we've created for the strategy. How this works is you would go and put in an equal dollar amount into each one of these positions. 12 weeks from now, you'd come back and run the screen again. If, for example, SJR is still passing that screening criteria, you keep SJR for another 12 weeks in your portfolio. If AZN is no longer on the screen 12 weeks from now, no ifs, ands, or buts, you remove it from your portfolio and replace it with a new stock that is passing it. All these things that you're looking at here in the report definition are all things that we are using to identify these 7 stocks. You'll see it has a very attractive yield of 6.41%. Let's say, for example, you wanted to do some more detailed research on one of these holdings. What you do is click on the ticker symbol and right-click with your mouse. And I'm going to show you that Charts and Integrated Company Analysis feature. So you could also go ahead and add some of your own tickers up here. So for this example, let me show you one of my favorites. And if you notice these little radio buttons going across the top, just to show you some of the things that I like to take a look at, like for example, the 12-month EPS. Here in this blue line, we're showing the company's past reported earnings. The red line is their forecasted earnings going all the way out to the middle of 2017. You could take a look at this company's history of coming out with positive or negative surprises. This most recent quarter here came in as the street expected. Aside from that, this company has a fantastic history of coming out with positive surprises. A lot of people like the snapshot report, which is a 1-page executive summary. You'll see it has a Zacks rank of a 3 or hold. 13 analysts are saying it's a strong buy, 2 saying it's a buy, 9 saying it's a hold. Year to date, it's up 32%. Let's go ahead and close out of this. And also one more thing, pure analysis. Here you could actually go and compare this company to its true peer group with a visual display. You like to take a look at estimate revisions. Once if you find a company that's performing well, chances are there may be another company in that group that'd be a better fit for you. But a lot of people like this feature of the program. Just want to make sure you knew how to utilize that. Again, a lot of people will go and spend an entire afternoon going through their portfolio on this. So here we're back at the 7 stocks that pass the screening criteria for the Growth and Income Winner strategy. Let's take a minute and actually look to see how we arrived at those 7 stocks. If you pay attention towards the screening criteria down here towards the bottom, this is really the nuts and bolts behind the strategy. First thing we're looking at is the current price. We want to make sure that's trading at or above $5 a share. Next, we'll want to see that there is sufficient volume for us to move in and out of these stocks. We're going to want to make sure it has a Zacks rank of less than or equal to 3. The return on equity has to be greater than or equal to the median return on equity for the S&P 500. The PE ratio has to be less than or equal to the median PE ratio for the S&P. Then we're going to make sure the debt to equity ratio is less than 1. This is a good way to ensure that dividend is not at risk. We'll want to make sure these companies have a beta less than 1. And then really we're just going and narrowing it down to 7 stocks based upon dividend yield. So the first thing we do in that regard is make sure that the yield on these companies is at least greater than or equal to the the median yield for the S&P 500. Then we'll want to choose the top 2 in each sector. This way we do have a diversified portfolio, not just a bunch of MLPs passing. And lastly, we just say give us the top 7 overall. That's how we arrive at those 7 stocks. So once you've built a screening criteria that you think hold weight, the next thing you're going to do is go and back test that strategy. So to do that, what we're going to do is go ahead and click on this back test button over here. You'll see we have our strategy loaded in here. We're going to keep our holding period of 12 weeks, and we're going to keep our date range. We'll start from 1/1/2010 and run this all the way up to November 8th. For this example, we're not going to be using any stop losses or trailing stops. So let's go ahead and run the backtest report. So here you have, first thing you're going to see is the performance chart. Had you started trading the growth and income winner strategy back at the beginning of 2010, you'd have a compounded return of about 130%. Versus our benchmark of 59.5. Go ahead and get rid of this performance chart and take a closer look at the actual backtest report. So if you take a look at period 1 on 1/1/2010, we ran the screen, produced 7 stocks. Those 7 stocks as a group or portfolio were up 5% for the preceding 12 weeks versus the S&P 500 of 5.1. So during this first period, we actually underperformed the market by 0.1%. We came back 12 weeks later. This time we were down 5% versus the S&P of 3.8. You stick with it 12 weeks later after that. This time we're up 6.4 when the market's actually down 0.3. If you actually wanted to see the stocks that came through for that period, all you'd have to do is click on this number 7 here and right click and go to backtest period details. Here you can actually see the stocks that came through for that period and how they performed individually. If you go and pay attention more towards the bottom, you'll see there was 11 12-week periods where the market was up, 5 12-week periods where the market was down. For this strategy right here, on average, when the market was up, you were up slightly higher than the market. When the market was down, you significantly outperformed the market. So a lot of people like this because when the market goes up, you're going to go up slightly higher than this, and when the market goes down, you're going to significantly outperform. If you take a look over on the right-hand side of the screen, this is what I like to call our vital statistics, and this is really the type of information you're going to be looking at and determining which strategy is best suited for your portfolio. Had you started investing with this, you'd have a total compounded gross return of 130% versus the S&P 500 of, we'll call it 60. Had you started with just 10,000, your portfolio would have grown over 23,000. Your compounded annual growth rate, 25.4% versus the S&P of 13.5, very impressive. And your win ratio, this is one of the big reasons why I like this strategy so much. Albeit a great time for the market, 88% of the time you're making money with the strategy versus only 69% of the time invested in the market. So we're making money 14 out of 16 periods. We already know from reviewing our screening criteria that the average number of stocks held is going to be 7. This strategy gives you 7 each and every time. But your average turnover is 59%. So what that tells you is that every 12 weeks, with all likelihood, you're going to be selling out of at least 3 or 4 stocks and replacing it with a new group of 3 or 4. So the question you want to be asking yourself, is this something you keep up with? Other interesting things to take a look at here, your average return per period. I like to focus in on the max drawdown. The most money you would have lost with this strategy would have been 5% versus had you been invested with the S&P 500, you'd be down over 11%. Now, I know many of you are looking at this and thinking the best feature of the strategy is the high return with the low volatility. But what I really like about the strategy is the sell discipline the Zacks method for trading provides you with. Because let's face it, this is probably the biggest challenge investors face is when to sell a stock. And it's not just retail investors that struggle with this. Plenty of professionals do as well. In this example, if a stock you purchased 12 weeks ago is no longer passing that strict criteria we use to find it, then you sell it. There's no ifs, ands, or buts. You remove it from your portfolio and replace it with a new company that has passed the screening criteria. If your company is no longer passing the screen 12 weeks later, you're not spending your morning reading news reports or searching for a new price target, looking for reasons to keep it or sell it. Because think about it. If it's no longer passing your screening criteria, it is not going to exhibit the same characteristics that you've come to expect from your backtest report. And this is really the very essence of following a trading system. With the Zacks method for trading, you are following a disciplined, systematic approach to the management of your portfolio. You're not going to be right 100% of the time. We're not printing money over here. In fact, we know from looking at our win ratio, we should expect to win maybe 88% of the time in a good market environment. What the Zacks method for trading is going to do for you is really put the probabilities of success in your favor. And with this program, you should expect your winners to be a lot bigger and your losers much smaller. And let's not forget about the dividend income this strategy produces. Right now, this strategy right here yields over 6% versus the S&P 500, only 2%. I'm sure we all at one point or another have held onto a stock with an attractive yield far too long than we should have. That's because the company with a 7 or 8% dividend yield very easily cloud your judgment on when you should be selling it. Not with the Zacks method for trading. Again, our system provides you with a strict and, more importantly, sell discipline. With the stocks no longer passing the screen 12 weeks later, your capital is better off in the new company that is passing the screen. And think about it, besides, after 12 weeks, chances are you've already captured your dividend payment. Does this make sense to everybody? Are people following along with how the program works, or running a screen, or following a system? I hope all of you can recognize how following a systematic, disciplined approach to the management portfolio can dramatically improve your performance and make investing a much more enjoyable experience. We all know this has been a stock picker's market, and what separates the winners from the losers is how they go about finding opportunities in the market. Well, today I'd like to invite you to take advantage of the opportunity to learn more about the Zacks method for trading by enrolling in our home study course. This closing bell segment was really just the tip of the iceberg. If you like what you saw here or you learned today, then I highly recommend you take the next step and enroll in our home study course. Let me go ahead and bring it back to this. Now, the course provides you with everything you need to become a more profitable and consistent investor. It does include 5 online video courses, so you'll be able to go along at your own pace. Video 1 is really just an introduction into the Zacks method for trading, similar to what we saw here today. Video 2 is going to teach you how to trade with the Zacks rank. In video 3, we're going to teach you how to create your own investment strategies and create your own screens to generate new opportunities for you. Video 4 is going to go into everything you ever wanted to know about backtesting your strategy for success. In the advanced backtesting video is pretty interesting because it will teach you how to perform a robustness analysis test on your strategy, in addition to teaching you how to utilize the optimum valuation testing feature of the program. You're also going to get the Research Wizard for an entire month. You'll have access to our top tool, and this is going to give you an opportunity to follow along with some of our more popular investment strategies or to test out some of your own ideas. You'll also receive a You also receive a copy of our top 10 screening guide. It goes over some of Zacks' proven stock picking strategies that have outperformed the market in good times and in bad. And then also, let's see, one-on-one consultation. Most importantly, you're going to get unlimited live support and training. My colleagues and I are here to work with you one-on-one in developing your own investment strategy or implementing one of our preloaded strategies into the program. And as an added bonus for enrolling today, you're going to get a copy of Zacks Finding Number One Stocks by Kevin Matris. In partnership with CyberTrader University, we're making this all available to you today at a substantially reduced rate of only $9. I'm not sure who it was over at CyberTrading University that negotiated this price, but I'll congratulate them on their skills because this course normally costs $78. So everyone in the audience today is getting great value. The book alone retails for over $50. What you're going to do is go to www.zacks.com/CTU to enroll now. And the opportunity is only going to be available for a limited time, so I do encourage you to take advantage of it. And finally, before I open up for questions, just wanted to take this opportunity to thank you for taking the time to learn more about the Zacks method for trading. I truly hope you are able to apply some of the knowledge you learned here today to your own investment approach and become a more informed, more confident, more profitable investor. Investing can and should be an enjoyable experience, and with the Zacks Research Wizard, you too can become a more successful investor by utilizing a fundamentally driven strategy that produces you with that strict buy and sell discipline. I see we have a couple questions in here. Let me go ahead and take this opportunity to address some of those. This presentation is going to be recorded, so you'll be able to go and review it. If it's too much, or if you'd like me to go into more detail one-on-one, I'm happy to. You can always reach me at 312-265-9287. My email address is also jslater@zacks. Again, feel free to reach out to me if you'd like me to go in some of the more detailed parts one-on-one. Another question we have here from Caesar is, are there any tools geared towards short-term trading, day and swing trading? Absolutely. There's probably something like 150 different screens that Zacks has created in the program. Out of those 150, I'd say maybe 25 of them are time-tested, proven strategies that you follow, each and every stock that passes. The rest of those screens are just new ways to identify new opportunities. We've got plenty that are based on technical analysis, breakouts, fundamentally driven strategies. But really what they are is really, ways to find new opportunities in the market. Any other further questions from the audience today? Okay, I'm going to go ahead and wrap it up. If there's no further questions, again, go to www.zacks.com/CTU to get started. That'll get you signed up. And again, my contact information, 312-265-9287. My email address here at Zacks is jslater, S-L-A-T-E-R, @zacks.com. Thanks again, everybody.